Today was okay. Let's take a look. Hey everybody, this is Spooky's Revenge. We're back with another 5-year, $500 Rags to Riches series episode. Series episode? Yes, I did it right. Let's just look into it. I'm going to get my face out of the way. That's the wrong screen. There we go. All right, so today you can see here I got a screenshot of the portfolio peaked a little bit today. It did. Let me just rewind here. All right, so first off, it went up pretty high. Obviously, it's pulled back a little bit since then. That's just the share appreciation on NEO and OCGN into hours. And then, of course, you can see that it pulled back down a little bit. So we're going to get rid of that. However, we still are about 4.5% for the day, which is pretty good on the dollar side of things. But one thing that I do want to highlight here is that this position, this NEO covered call, did exceed the $5,880 capped profit, so to speak, the max potential profit. It did peak over that a couple of times today, and that's just, again, from the share appreciation, but I really, really, really want this to be a sign so I can show you guys what that looks like rather than just, you know, maximizing profits and making the account bigger and bigger and faster and stuff, because I don't want that to be a make or break thing for any portfolio. I just want to show you guys how to do this stuff. So, you know, it went up to like, I think it was like a $500 or something over the 5880. It was 59 something, 59, or no, I'm sorry, it was a little bit. It was over 6,000. But anyway, I digress. So looking at NEO here, you can see it's just kind of, it went sideways all day. So that's pretty cool. It made $2,300 on a sideways day for both these stocks. You know, price didn't really do much. They both did, well, OCGN pushed up this morning pre-market, but it also fell down yesterday. So it's still relatively flat. And of course, we're just still kind of in this range. So nothing big going on there, nothing big going on up here. But the big is right here, this 2351. Now that's going to fluctuate, obviously, because of the size of the account, but the percentages is what I care about. So you can see in just over a week, just looking at this, right? I started buying stuff on last Monday, okay? I bought the 100 shares, I sold the covered calls, I got a bad fill, so my average was a little bit offset. That's why you're seeing the red, and then the price went up a little bit, I think, like towards the end of the day or something on the shares. So the covered call value went down. Or I can't remember exactly what happened. But anyway, next day I made 2.29K. Today I made 2.35K, so there's a little bit of a trend there on Tuesdays apparently. Wednesday I made 937, and just forget about the big dollars, right? This is a $50,000 account. Now it's up about 10%, 10.72% overall, right? It's not just a per day thing. And look at these percentages though. This is what I want to focus on because this is where we make our bread and butter. It's not the specific dollar amounts. It's not the raw P&L. It's the percentages, right? And percentage return on dollars invested is really what helps us compound any size portfolio. And I posted a post on Facebook, and I posted a post in the Discord earlier about 3 different accounts that all have different ranges, and they all had the same trajectory of upward movement. Now you're going to see on this one here, this is just from February 28th. That's when I added the money into the account, into the portfolio. You can see here it was a $0 portfolio. It's a brand new portfolio, so this is why I'm doing it on this, so that's clean demonstration. I put 50K in, and we're up about 10% within a week. Well, a little over a week. So that's it. So if I just carry the same mentality over to other portfolios, you can see the same exact end results as far as their growth over time. So, but you can see here, you know, 4 profitable days, 3 red days, but the percentages are really what matters. So 4.5% here, 4.5% there, 1.8% here, 2.5% here. Whereas with the drawdown, I got 0.41, 1.09, and 0.51. So that's disproportionate risk reward. And the beautiful part about this is it didn't really matter what the stocks did. I mean, if you look at the daily chart on this, you can see, you know, the last couple of days it's gone up, which is great. That's where we get the share appreciation. And again, I can get assigned at any time, so I'm not worried about it. But if you look at something like OCGN, you've got a mix of red and green days, and it's the same end result, right? Because as the price goes down, the call value, or my profitable section of that call value, increases because the actual value of the call drops, right? So since I'm a seller, that makes me more profitable. And if the shares go up like they did on NEO, you can see the price on the shares goes up and the covered calls go down, which means overall I'm still up by a net positive dollar amount. So I don't really care what the price does. And since both of these have just been kind of locked sideways for, more or less, I mean, obviously NAO's pushed up a little bit, but if you look at the grand scheme of things here, relatively sideways and relatively sideways, right? We haven't broken over this high yet. We haven't broke below this low yet. We're just kind of going sideways in the grand scheme of things, and that is what is allowing these calls to just erode, despite the fact that the price is moving up, despite the fact that the contract value is increasing. Their inability to exceed that theta is gonna sneak up on it, right? And that's, I'm either going to get assigned or these contract values are going to drop off. Either way, this big red number and this big red number are going to be taken out of the portfolio, and I'm just going to have more and more profit. So that's the idea. And again, it doesn't matter what size account is. Obviously, I wanted to use this as a perfectly clean demonstration of the process. We just log into the actual Rest to Retire, or well, Rags to Riches. Rest to Retire is a wonderful product, especially for this stuff, by the way. If you guys are aware of that, it's just it's 3 times a month. You get a retirement article. Not going to do a sales pitch. I'm just saying if you're looking for investment stuff, that's solid. I mean, all those are pretty high up, and I actually thought about taking quite a few of those on this portfolio. So, all right, so if we just look at these positions here, you got JP Morgan, right? JAPQ, that's just going, right? I don't have to think too much about this. It's just a good long-term investment stock. I'm just letting it do its thing. It's already 9.11% up, and if we look at the trade details here, you can see that I've averaged up on this quite a bit. So, bought one share 48.43, bought one share 48.32, 2 more shares down here at 46.61, 1 more share at 45.28, and this is all September and October, right? And then in December, I averaged up because the price reversed and started going back up. So you can see, around here, my average must have been somewhere around 46 something, I assume. And then, 48.84, I bought another share. And then right here at 52.87, I bought 3 more shares. So it's bringing my cost basis up. And I don't care about the actual dollar amount for my average. I'm just interested in acquiring shares of a stable growth stock. And you can see it's pretty solid. So I don't have to worry too much about whether this is going to go up or down for right now. I got a nice clean position. I'm putting a good chunk of the portfolio into that. Same with Johnson & Johnson. If you just look at this over time, it's got a little bit of chop, a little bit of volatility, but if we look at it on the higher time frame here, it's a nice clean growth stock, plenty of growth potential. It's got its little catalysts here and its little dilutions and stuff, but I don't have to worry about those because I'm in a nice stable position and my shares will be adjusted accordingly if it's a dilution catalyst. So this is where I'm putting most of my money in the stable stuff. And then you can see I've got the OCG uncovered calls against that. And this one was above the assignment threshold quite a bit. So if we look at the 30-minute time frame, you can see it's poked over there. It's poked over here. It kind of stayed there yesterday pre-market. It stayed there last week on Friday quite a bit. And then I think this is Thursday, poked over that. So we've spent some time in assignment territory and we haven't been assigned. And that's okay, right? Assignment is less frequent than most people fear, right? But you always want to be prepared just in case. Now, in this case, I do want to get assigned, so it's okay. It's okay if I get assigned. I kind of want to offload the shares. But right now, if I wanted to, I could close this covered position. Well, I'd have to wait till market's open. But if I wanted to close this right now, I could walk away with a 17% profit on these dollars that I've invested, this $100. So that includes the $6.04 in share appreciation, as well as the $7.50 I've gained in the depreciation of the contract that I sold to some other fool. I suckered him. He bought my stuff. He paid me $15 for it. Now it's only worth $8. So if that's any of you guys, I'm sorry, but I wouldn't personally be buying calls on OCGN, and that's why I'm selling them. It's 50% in profit for right now, but it expires Friday, I think. Let me just double check that. The Ides of March there. Yeah, Friday. So, I'm not going to worry about buying this contract back and locking it out. I'm just going to let it go till Friday. But chances are I'm not going to get assigned on this unless the stock just blasts miraculously and I get assigned within that. So this one's probably just going to expire worthless. And that's okay because next Monday after that, I'm just going to sell another covered call against him and collect more premium. And that's going to take my cost basis, which is currently around 72 cents, I think. It's 89.94 minus 15, so yeah, around 74, right? And then I can just reduce that even more when I sell the next covered call down into the 60s probably. And so on and so forth until the shares are free, at which point I can do all kinds of cool stuff. So down here, this one's a longer expiration. It's only dropped about 2 cents so far. It's gone up and down, but about 10% in profit there. I can close this one for a 12.5% profit as well. if I want to, and I can close them both for a total of $22.06 on a $200 investment, roughly. All right. Easy enough. Schwab is up. SFE is still waiting on that one. O is up. Main is up. Ladders still same as last video. It's kind of just hanging out. And the Neo calls are just kind of, the leaps are just kind of chilling. So not a whole lot going on right now in this portfolio. That's why I've been focused on this one over here, just so you guys can, again, get more focused demonstration and more clean demonstration of the covered calls, because this is something I'm going to be building into quite a bit on the Rags to Riches portfolio. And I just want to show you guys how it all works in a sterile environment, and then we'll mix it in with the other stuff as that portion of it gets bigger. All right, so I just wanted to show you guys this today. I wanted to make a specific episode just about the surges in price, and if you're a newer trader, or if your account gets a little bit bigger, a little bit faster, and you start seeing big numbers like this, there's always that temptation to want to sell it and lock it in fast, which in some cases it makes sense. You want to scale out of stuff, you want to secure those profits, but my specific plan involves a profit of $5,880 on this covered call, and I think like $1,200 and something on this one. So I'm not going to cut myself short, because I know one of these two is going to happen either way, and this just isn't one of those times where I want to cut my profit short. So I'm just going to let it play out. Plus, it lets you guys see from beginning to end on a realistic time frame exactly how covered calls work in all scenarios, and then we'll just pick it up from there. Thank you all for watching. Have a good day, and we'll catch you next time.